Hi, everyone. This is Jason Burack of Wall Street for Main Street and independent financial journalist Eric Dubin. Welcome back to another Welcome to Dystopia podcast. This is episode number 39. Eric, I thought this government shutdown was going to last a while, but it seems that the Democrats have decided that they made a big political blunder in only the last 3 days or so with the backlash on TV and social media. And now we don't have a government shutdown, but it's only for another 3 weeks.
They seem to be getting quicker on these cycles, huh? You know, we've had, 4 shutdowns in the last 5 years? Something like that.
It's getting totally ridiculous, kabuki theater type of stuff. I put out a tweet about an hour ago. I said Congress is so inept and corrupt that these government shutdowns are theatrical events, are almost guaranteed to occur monthly going forward. This latest funding isn't even for a full month. It's really sad that things are this bad. And so, we got basically in exchange for government funding, we have the Democrats this time. I guess the Republicans tried this in 2013 and it failed and there was a huge backlash. The Democrats tried it this time to sneak in DACA and then full amnesty for the parents of the Dreamers in exchange for funding the government. This type of behavior, Eric, is totally ridiculous. I think this is banana republic behavior. There's whether it's release the memo with the FISA warrants. We could do a whole show on just the reasons that the U.S. is a banana republic now. But I think the U.S., Eric, is the largest and most powerful banana republic in Earth's history. The world reserve currency, enormous global military empire, just a scary amount of corruption. It's really exponential. And the moral decay and moral bankruptcy. This, Eric, it almost reminds me of, remember in Lord of the Rings, the Ring of Power that Tolkien wrote about, how, basically the world reserve currency is such an exorbitant privilege that it's corrupted everything that used to be good with the United States to an absolute level. So it's like that Lord Acton quote about absolute power corrupts absolutely. I think that's what the world reserve currency has brought upon the U.S. for having the world reserve currency since 1944 in Bretton Woods.
Sure. Yeah. I mean, we have abused the exorbitant privilege of creating the world currency, and in political circles and international relations, power is derived from 3 primary forces: economic, military, and moral authority. And the United States, as an empire, has been squandering all 3 very, very aggressively in the last decades as we've passed. And currency and sound currency is a communications signaling device. I mean, our system is now so screwed up that even on the nature of the monetary system that we have results in bad investment cycles and monstrous boom-bust cycles in our financial markets that blow up on us every 10 some odd years, 8 years. We're going to go through that cycle yet again. And people are, in recent months, very high on Bitcoin and other alternative assets and very despondent about what's going on with, things like traditional safe havens of gold and silver. But all these things are going to change. Manipulation isn't going to go on forever. The markets are being goosed by artificial means, and they will not grow to the sky. What's really fascinating is we have expectations for a new inflation cycle percolating through the global economy, and people thinking that, oh boy, we're going to have real economic growth and things are getting tighter in the U.S. labor market, and all of these other things that Keynesian economists are pointing to, trying to paint a rosy picture. But we're 8+ years into this financial market expansion in the equities markets, bond markets backing up. We're now at, on the 10-year U.S. Treasury, 2.64%, which is the highest rate it's been in a long, long time. And we're going to go up and up as the Federal Reserve continues to try to do their dog and pony show about normalizing interest rates. As the price of money goes up, that's going to crush everything. We are so in debt in our system that the interest rates are going to be the nightmare that is revisited to, the financial markets, and that's going to spill over into everything this year. I think it's going to happen this year.
And in the long run, Eric, these Trump tax cuts, which I'm in favor of tax cuts, I'm pro-free market, Austrian school libertarian, I'm in favor of small government, less rules, less regulations, less taxes, less red tape. But unfortunately, with these Trump tax cuts, this is just an enormous version of supply-side economics. The government isn't stopping its spending. In fact, Trump wants to spend more. Trump wants to increase military spending. Trump wants to increase infrastructure spending, although he claims he's going to get the private sector to pay for some of the infrastructure spending. But maybe, you talked about inflationary expectations, and Keynesian economists, they divide up inflation between cost-push inflation, which is stagflation. Austrians would call that misallocation of capital. and then demand pull, which is wage growth. And so, we are seeing some signs of wage growth, at least for some jobs in the U.S. economy, although, a lot of part-time jobs and others are not really getting their wage growth. So if we do get that wage growth, that could be the inflationary spark that lights on fire all this liquidity that central bankers, this gasoline liquidity that central bankers have been pouring on the global economy since the 2008 financial crisis.
Yeah, and we've even hollowed out our labor market over the last 10 some odd years. I mean, we have people who have lower levels of skills, despite the fact we have this gigantic bubble in, student loans and lots of people going to college, et cetera. And more people are working part-time. People are earning less and taking on more jobs. So by the numbers, the Department of Bureau of Labor Statistics can paint a picture that, the labor market is getting tighter, and the conventional Wall Street community looks at these fictitious 5-some-odd% unemployment rates, 4% unemployment rates, and the entire labor force is different. We've seen a gigantic increase in labor force participation rate with people giving up looking for work. And so,
or not counted,
they're not counted, right. They're undercounted, or they've just simply vanished. We are now at the highest level since the early 1970s for labor force participation, falling through the floor.
And remember, Eric, that candidate Trump was pointing this out, and we were in agreement with him. But now President Trump is not pointing this out.
He's just a showman. He is in it for himself. He cares more about his ego than doing policies or representing policies that actually are substantive and reformative. I mean, the guy, he's a huge disappointment. Everything that he stood for practically in his campaign has been reneged on. And the people that he surrounds himself with are a bunch of bozos. They're all corrupt.
He needs to fire Jeff Sessions right away. He needs to fire Jeff Sessions. Yes. Jeff Sessions needs to be fired. I talked about the banana republic and how the U.S. is the world's Earth history's largest banana republic, and yet they have the world reserve currency still, an enormous military power. The other thing is, banana republics, Eric, normally when one regime goes into power, they wipe out political opposition. They make, they throw people in jail for dissent. They, make people disappear in the night. That's what banana republics do. And we're seeing evidence of this with the banana republics, with the unmasking and the wiretapping, with what went on in the people at the top in the corrupt Department of Justice, in the corrupt FBI. Really, my research indicates that this thing started when Bill Clinton won the White House and was president, and he told Janet Reno to start firing a lot of the basically Republicans in those two agencies, and started moving in. Hillary and Bill started moving in their own people that were hand selected and loyal politically. So this has been building up.
This is so beyond partisan politics, Jason. I mean, both parties are ridiculously corrupt, and the kind of control files that both camps keep on each other, I mean, they're largely of the same general class set of interests, and they come from the same school systems, and they have basically the same worldview. There's shades of gray and whatnot when it comes to competing oligarchs and the political dynasties that they lob at each other and so forth. And, the political parties do have differences, but by and large, I mean, the system is just super corrupt, and they don't call it a deep state for nothing. It has collected interests that are shared by pretty much the entire superstructure of what is our society in America.
Yeah, and to add to your points there on the corruption, it was Jeremy Grantham, famous investor. He's been talking about recently, he called the U.S. a corporatocracy. America's, quote, run by those guys for their own interests, quote. So it's basically been turned into cartels and, oligopolies and kleptocracies and the amount of corruption. So a lot of people are starting to wake up. Unfortunately, a lot of the people in the Bernie Sanders camp, their solution to the problems that they see in society is larger government, more government control, higher taxes, and capitalism, more rules, more regulation. So, a lot of those Bernie Sanders types are very smart people. They identify a lot of the problems in society, Eric, but unfortunately, I think their solutions are just as bad as a lot of the problems that they're highlighting. So,
sure. And the nature of our problems, too, are such that with really large systems, there's a certain amount of inertia that comes with all the actors within large systems tending to their own fiefdoms. we have a system right now that's wobbling because of all the problems that it has, and it has a certain degree of entropy that will sustain itself over a long period of time. Draining the swamp, in other words, as Trump professed to be able to do, even if somebody is a miracle worker, not one man can do that. But when it comes to who Trump is as a person, he's a complete disappointment. He is not the man that he represented himself to be. He's an arrogant little snot.
I think Trump has done a few good things, but yeah, overall, I didn't vote for him, as my listeners know, but I think the deck is really stacked with him, with the majority of the mainstream media really, if it isn't the Russia collusion, it's that he's crazy now, and, they're trying to get him to, they were talking with his doctor about a mental competency exam. The amount of, let's say, crap that he is taking from the mainstream media, literally to, ruin his life. I mean, even his son, Eric Trump, just had a kid 4 months ago, and the baby's getting death threats already. And,
he should have been fighting back a lot more than what he already has. This whole image of the presents himself as like a street fighter and so forth, as a savvy businessman coming up from the ranks. I don't buy it. I think he's a little overwhelmed.
I think
he doesn't know what he's doing.
I think he's fought back a lot, but the people aren't prepared for him to even be doing what he's doing. So that's why people are saying that he's crazy, because he is fighting back, and they're not used. The people in power are not used to that.
He's been in office for a long enough time now to judge whether or not he's been successful in his pushback, and I think he's been an absolute total political failure. He's had circles run around him. He's a complete and utter bimbo.
No disagreement from me on that, on a lot of the things that he's done so far. So he almost gave in to DACA, which would have guaranteed Democrats win a lot of future elections if that's agreed to, and amnesty is granted, and the parents of the Dreamers are given amnesty as well. That would have guaranteed future Democrat wins at the elections.
That was an easy fight for him to win. It's just a baiting point with some small amount of money attached to it in the budget. I mean, anyway.
So,
more to the point about, entropy and empires falling apart and where we are economically and whatnot. I mean, all these things politically are having an impact on our financial markets. We've seen the dollar almost slice through 90 on the DXY level vis-a-vis the 6 main currencies in the DXY basket. Bond market, something that we addressed. I mean, these are the kind of things that over the course of this year, as the political turmoil continues, and as the Fed continues to try to threaten to normalize interest rates, which is a vacuous threat, we just have way too much debt to be able to deal with the Federal Reserve attempting to push interest rates up and normalize their balance sheet. All these things are like a brick wall waiting for us to hit. And it's going to happen. Financial market cycles have not, vanished into some thin air fantasy land. And this year is already shaping up to show that these kind of strains are beginning to express themselves in the financial markets. Even though we have the S&P 500 and the Dow hitting all-time highs, the real story, I think, is what's going on in the currency markets and the bond market. That's where people need to keep an eye on in the next month, because I think we're going to see interest rates cross over 3% sometime this year. When they do, on the 10-year U.S. bond, it's going to create stress in the equities markets. We saw that before, a couple years back. I think it's going to happen again.
And the equities markets, Eric, haven't even had a 1% correction, I think, in over 140 days, and they haven't had a 3% correction in over a year. Really insane. And the Dow has basically gone parabolic. So it did a record 5,000 points last year in 2017. It went up from 25,000 to 26,000 in, 5 days? Do you think? And
we've barely had any, corporate profit growth, and people are just pricing in the impact of tax credits and, monies from abroad and corporations that are held abroad and corporate treasuries coming back to be domiciled in the United States, creating excitement about new investment and all that. That's going to probably just end up, creating real economy inflation and not productive investment. We have seen trillions of dollars put into the financial markets that have barely moved the needle on the real economy, but it's now finally trickling in, like we were talking about with the hollowing out of the labor market, the labor market is actually even more sensitive now to slightly rising wages because everything's been reset to lower level. You know, the average middle class wage earner in the United States is earning less, working more, and then we're going to see inflation because the market is tight. It's just a smaller labor market because we've hollowed it out. I mean, the insanity of what's going on, it just beguiles imagination.
Yeah, I think we're going to see the stagflation type of inflation, though. Not
exactly.
Not the high, not in the 1970s necessarily, where there was some wage growth. Some employers did it for a while, although there was also stagflation because eventually the inflation rate got high enough where the companies didn't want to raise the wages. Paul Volcker raised the interest rate. So I think stagflation, a lot worse stagflation, is coming. Do you think, Eric, that central bankers have irreparably distorted all markets now, where in 3 to 5 years we could see potentially Dow 40,000, a market crash, or both within a 3 to 5 year time frame?
Yeah, I think that's possible. I mean, we have such large distortions that some kind of market turbulence is going to happen. We can continue. I mean, who would have thought that we would be where we are right now at the S&P 500 and possibly even hitting 3,000 or whatever at the end of this year?
I mean,
something like that could happen.
Paul Krugman didn't think so, right? Remember, he said as soon as Trump won that everything was going to crash.
Krugman can't even tell what's on the tip of his nose. But, it's possible that we will see the equity markets go a lot higher because there's enough liquidity that will push that kind of reality, as well as the fact that around the world, when capital spooks, a lot of it flows to the United States because it's considered a safe haven and our markets are deep enough. And so, seeing some flow into the equity markets is possible. The European equity market has lagged, generally speaking, over the last decade in this whole overall recovery. So a lot of people are thinking that that might be a place to hide. But their banking system is still very unstable. Italy is a mess. The ECB can't easily withdraw the purchases of bonds, particularly as it spills over and supports the Italian banking system.
Yep.
So central bankers are in a pickle. They can't really reverse what they've put in place other than, a little bit around the edges for political show. And as that process unfolds this year, we have the bond markets around the world going up in yield. I mean, that's like a bomb with a really long fuse on it, and everyone's just going to have to guess as to how long the fuse is going to be. But at some point, that bomb is going to blow.
I agree. And so I think the best way to summarize that would be that the central bankers can maybe take a break from these liquidity programs or quantitative easing or whatever the hell they want to call them next. They could take a short break, and maybe they'll allow asset markets to have somewhat of a correction, but they still, and I think you would agree with this, they don't have an exit strategy. There is no viable
Well, they might
exit.
even do it in the reverse order. I mean, you might get a, stock market correction, 7%, the phones start ringing from Basel, Switzerland, Janet Yellen loses her lunch, and, all of a sudden...
Yellen's gone in a month, so, she's...
Yeah, I know.
Yeah.
But it can happen in a month.
If I was Janet Yellen,
I don't think it will.
I would make sure...
I think we're still in the rump of this liquidity expansion.
If I was
Janet... come this summer or fall, I really do think we're going to see some pretty rocky times.
If I was Janet Yellen, I would just, if I had no morals like Janet Yellen, I would just make sure the liquidity injections, the spigot was still on before I left. So I wouldn't get blamed for it. So they may say, I mean, the Fed was already supposed to start taking money out, and their balance sheet hasn't really contracted. I think it's been flat for months now. So they were supposed to have already started taking money out, and they haven't yet. I think they took out $11 billion out of the whole $4 something trillion balance sheet. I think 11 billion has been shaved. Huh?
Yeah. 4.5. It's huge. It done a fly spec. And they will reverse when the equity markets roll over. You can kiss, quantitative tightening goodbye.
Their balance sheet is huge, but not as big as the Bank of Japan now and the ECB, because they've been working together. I mean, they've been coordinating things.
Mm-hmm.
The other one is China. China's a huge bubble right now, so there's
no one knows how big China is. I mean, ECB is 4.7 trillion. And China could be, like you were saying before we started recording, their credit creation could be as much as 30 trillion in the shadow banking, all told.
Yeah, the People's Bank of China, I've seen research reports where it says the People's Bank of China has 220 trillion RMB listed as liabilities. So when you convert that to US dollars, it's almost 40 trillion. And so they're not going to be able to stop their credit bubble and their credit injections. In fact, their GDP numbers have actually improved. There's rumors now that they actually have 11% real GDP. So they have a boom going on right now in China, and things look great. But this is like an artificial boom, as the Austrians would say. So this is kind of like, the U.S. housing market from 2002 to 2006, and that's kind of how China is right now. There's a nice honeymoon phase where the credit's being used and things are being built and GDP numbers look good, but there will be a bust at some point. I don't want to time things exactly. Look, Kyle Bass has been wrong on the timing of that RMB devaluation for 2 years now with his hedge fund.
It's really tough. I mean, they've had three primary giant booms in the last 15 some odd years, 18 years. That first one all the way through 2006. Then they reflated around 2012 with a lot of liquidity. That's actually what helped the global economy, 2012 to 2015, give or take, because they had fits and starts and they were doing it. Now they're doing it again. This time last year, you and I were talking on Welcome to Dystopia about how China was trying to curtail their markets to rein in liquidity, and they spooked. They're afraid of political turmoil in their streets, just like Tiananmen Square. The leadership, has a consent of the governed challenge upon them.
Exactly.
That shapes their politics.
So the gold community and a lot of the people in the alternative media think that China cares about a gold standard. That's not the main priority in China. China is a totalitarian government that does have some capitalism at the small levels for small business and stuff, but they have a lot of corrupt state-owned enterprises and cartels there. The main things the Chinese government cares about, like you said, is political control, but they have achieved that through making sure that a lot of the adult males are employed and making sure there's no food shortages. So they have to make sure.
And provisioning a nice standard of living with growth overall, an upwardly mobile society. They created 300 million middle-class individuals in the last 15 years, and that's where the political consent from the government comes from in China, and they don't want to mess that up.
Yeah, and I actually just finished a very interesting book about a journalist who was in China, and he traveled along a road in China that went through a bunch of different provinces in China. And so a lot of the people in China, they're very aware that even though the political systems may change, whether it's an emperor or communism, that there's always corruption, and the people in general really don't get a lot of the good things in life. So, I mean, people there kind of have like a survival mentality that the people at the top of the government, it may change, and they may say it's a different political system, but the people are going to get screwed. So it's a really interesting dynamic there. I'd say they have a more realistic view about governments than a lot of American people do.
Yeah.
Well, let's my listeners, when I've been interviewing gold and silver experts and doing gold and silver videos, gold and silver had a stealth rally in 2017. Gold was up around 13%. And so, gold almost broke out recently, Eric, on the charts. There was a really almost textbook bullish inverse head and shoulders chart pattern. Looked like gold was about to go to 1350, maybe 1400. Here we are. Let me pull up my Kitco chart really quick. I think gold's back down around 1334, and silver's a little below 17 at $16.99. So, there is maybe a cap by the cartel to try to delay the inevitable. But a lot of my listeners, if you read the comment section, there's a lot of people who have totally lost hope in gold and silver. But one thing I want to relay the point of is in economics, there's basically the manipulation in gold and silver. Eric, would you agree with this? Is essentially a price control with the manipulation. And so, they can't really take silver back down to $10 an ounce or lower. And they can't really take gold back down to, say, $600 or $700 an ounce or lower, because then there will be huge supply problems. And I don't see demand collapsing at that point. In fact, demand would either stay constant or maybe even increase. So there are limits to how much, with the paper price manipulation in gold and silver, the bullion banks, the central banks, the cartel can do. There's limits to this because then there will be supply problems at some point, especially for silver.
Yeah, of course, and the whole theme and question about whether or not manipulation is going to continue indefinitely and people giving up the ghost and letting go of their insurance positions or their speculation or both in precious metals is something that people have been despondent about for many years now. It's just the nature of where we are, given that this is one of the most important assets to control, so as to be able to paint the picture that everything is hunky-dory in our financial markets. If gold was allowed to rocket higher, that would create what Alan Greenspan referred to as the barometer of the markets, or I think he said thermometer, I forget. But, basically gauging the pressure within, say what?
He probably just, sorry to interrupt you, he probably just mumbled it and no one could understand.
Well, he did profess to be an expert at, mumbling, because that's what he wanted to do every time we go on Capitol Hill. He was really proud of that. He actually said that in interviews. But, the reality is that gold is the traditional fear gauge in the market. It signals inflation. It signals credit, insolvency problems, dysfunctions within the marketplace overall when it comes to political risk, when it comes to smaller markets. Gold is the traditional barometer of what the hell's going on in the markets when there are things that are going wrong. And they've been attacking gold because in order to keep the bond market behaving, you had to keep gold behaving. And in order to pull off this resuscitation of our financial markets since the 2009 crash, gold had to be assassinated. And silver had to be attacked all the more so because silver is like the Achilles heel to the precious metals universe, because there's a lot less of it than people realize, and it's also critical as an industrial metal. And with companies that use it at a percentage of price of final product that is kind of trivial. The amount of silver that goes into an automobile is tiny. So when a company like Ford Motor freaks and knows that it needs some silver for their electronics, they can go out and buy it, whether it costs them $20, $30, $40 an ounce or not. They don't care. So this is the problem that the cartel has. The problem is a physical bomb that can blow up on them if they get prices so out of whack that the ongoing forward year's supply of physical gets distorted. And that's, in fact, what we've been seeing as a backstop against silver going below 13. In the time that you and I have been recording this show for the last couple of years, we've already seen a couple of attempts at getting silver below 13 as the cartels attacked. They can't get it below there. People are rightfully despondent and feeling like it's completely hopeless to own precious metals because they just don't go up. But it's still a valid insurance position. There will come a day when that insurance will pay off. Unfortunately, you can only buy insurance that's useful before one's house burns down. Otherwise, fire insurance is pretty much worthless if your house is already burned down. People just need to suck it up and buy exactly what they can afford to sleep well at night with when it comes to precious metals. I hate to be that blunt, but that's the reality of where we stand. The insurance value is real.
And gold and silver, Eric, will have to go up because price controls in the long run. And yes, we've had a paper bear market now for about 7 years, since 2011. But in the whole scheme of things, that's not going to look like a long time. So they've gotten away with it for a lot longer than you and me and other people in the gold community have thought, but they're not going to get away with it forever because the mining companies, they have to deliver the supply still. Metal is needed, especially for silver for the industrial end users, like you said. The world still needs smartphones, and they need silver in electronics, and they need silver in a whole bunch of other things. And so, if they cap the silver price at, say, below 13, then the supply of silver will dry up. And I think, things, Eric, they prevented silver from rising so much since January 2016. I showed the research work for this in the charts and elsewhere, that things were so desperate to cap silver and prevent it from rising higher that they had to manipulate the copper price higher since January of 2016 just to help cap the silver price and keep a lot of silver byproduct, probably over 100 million ounces of silver byproduct online. But now the copper price is...
You and I have a different take on that. We've talked about that in our last show. I think it's, I think what you're observing is in fact something that happened, but I don't think that it necessarily was something that the cartel purposefully went after just because of the fact that, most of that copper move was based on Chinese actors in a shadow banking system in China using copper as a way of generating new credit. They sell warehouse receipts, and they expand the demand for copper, and that did help pull up the price of copper over the course of the last couple of years. it theoretically would be possible to tease out with sensitivity analysis and a study exactly what the heck happened, but I don't have time to do that. Last time we talked about that, we joked about if someone is enterprising enough, go for it. I mean, that's the footprints to test your theory would be found on the LBMA and what's going on with the hookup between the LBMA and the Shanghai Metals Exchange and what was going on with copper and the shadow banking system. I mean, that theory could be tested.
My main point though was that the copper price was artificially rising. It wasn't rising, because the global economy needed a lot more copper. There was a Zero Hedge article a couple days ago that said the premiums for physical copper are actually low. So
can you imagine what that would have done if it wasn't there helping the cartel to elicit more silver supply by byproduct production? I mean, it would be a disaster for them.
I think
we would have seen silver into the 20s.
I think we would add 25 silver. If the copper price hadn't risen, 30, 40% since January 2016, I think we would have had 25 silver pretty easily. But, now we were at a silver price a couple months ago where even First Majestic Silver, which was one of the lowest cost silver producers in the world, they said they didn't have the capital to make investments to continue to the lower cost. And when silver, got below 15 briefly, or around 15 a couple months ago, they said that they were struggling. They had a couple really bad quarters. First Majestic Silver actually did a really smart acquisition with San Dimas because the Primero Mining had an even worse balance sheet than First Majestic did. So First Majestic, since they're a large company and they didn't have a lot of debt on their balance sheet, even though their silver mines were struggling to cut costs and maintain margins, they were able to go out and do a prudent acquisition. So we'll see. But the people who are saying that the cartel, the bullion banks can do this indefinitely, I really think that James Turk has, obviously he screwed up on his price predictions with gold and silver in the past, but I think talking about this as a managed retreat at certain price levels is appropriate. And in less than 3 years, the bullion banks are going to be defending $25, $30 an ounce silver, and they're going to be defending $1,400 to $1,600 an ounce gold, or otherwise the supply for both of those metals is just not going to be available because a lot of people in the gold market will say the stocks to flow argument with gold and that there's unlimited amount of above ground gold, but a lot of that above ground gold, the supply is not really available to hit the market. So even if gold prices hit,
Of course not. The vast majority of gold is sequestered in vaults.
Or it's religious artifacts. Or jewelry.
Religious artifacts, yes.
Yeah, religious artifacts or jewelry. So, a lot of Indian brides, they wouldn't let their husbands go and liquidate their gold for a profit.
Even the majority of bullion in bar form is sequestered and ain't coming to the market unless if we see significantly higher prices.
Yeah, so I know I have a contrarian opinion about the gold stocks of flow argument, so that's my counter argument to the contra argument to there's plenty of above ground gold. Well, the majority of it would not be available even if the gold price went to $10,000 an ounce. It would not be for sale.
We already live in a world where this paper game manipulation of the markets are such that we have, at times, at least as publicly documented by the Reserve Bank of India, 97 times ounce over ratios of physical versus what trades on the LBMA. We have a world where it's probably as much as 400 to 1 ounce ratios at many a time when they're doing the manipulation. The problem isn't, doubling physical available. The problem is this paper monolith that they launched to try to create the price suppression effort is just so huge it's going to blow up on them in and of itself. The effort is that large, and it gets bigger and bigger every dang year. We're seeing this particularly in silver with the open interest levels, at open interest levels that are above where silver was when silver was trading near $50 an ounce a few years ago. That's how much short interest has been dumped into the market on the COMEX to keep this whole house of cards moving. And at some point, it's just going to they're going to have to do a managed retreat. I do not subscribe to the whole thesis that a lot of people like Ted Butler and Harvey Organ and other people have talked about how things are just going to blow up one day.
Yeah, like
it's going to be an
$100
evolutionary
silver
process.
overnight, $800 silver overnight. Yeah,
that ain't happening.
Yeah,
the only way that's going to happen is if we have a financial crash and the powers that be actually want to do a full reset and they have the contingency plan sitting on the dang shelf right now to do something like that if they want to.
We would also have to have like really large mines shut down. So we'd have to have a lot of these silver byproduct mines, so copper miners, iron ore miners that have a lot of silver byproduct, we'd have to have them go bust and shut down the mines. So there would actually have to be like full-fledged mining supply shortages, and then the market would panic, and there would be a bunch of these high-frequency trading algorithms go into long silver, and it would start to blow up the shorts. So we don't have that yet, but I agree. I think we're gonna have a managed retreat. And basically, if you look at the new supply that's going to replace the currently mined supply, the producing gold miners are in real trouble in a couple years. They're going to have $1,400 gold to replace all the gold supply that they've been mining. So 1,400 is going to be the new price floor in a couple years. And for silver,
More.
I think it's
more. I mean, it was rising.
Well, let's be.
All of a
I'm
sudden,
being
prices are going to start going up. Gasoline's going up.
I'm being conservative.
Yeah.
I'm being conservative. So 1,400 minimum, and for silver 25 minimum. But it would not surprise me to see a lot higher prices. And so, maybe in the short term we go a little bit lower, but that just means that the miners are not going to be able to raise capital. They're not going to make the investments into finding new reserves. They're not going to go out and do the acquisitions to add to supply. They're not going to reinvest any profits, because they really don't have many, back into the ground for exploration to replace reserves or add to a deposit or make an investment into a junior. So I think, the industry, all the costs have been basically cut to the bone. Pretty much, you guys are, my listeners to this channel are aware I've interviewed a lot of gold experts, and basically almost every single one of them the last year or two has told me all the costs that have been cut to the bone during the bear market have been cut. There are really no more costs to cut without firing, CEOs and CEOs taking like 70% pay reductions. So other than that, all the actual costs at the actual mine area have been cut that can be cut.
And when you think about long-term cycles, like decade-plus long windows of time, and thinking about how markets work, I mean, this is a wonderful time to be getting more exposure to the precious metals space and mining companies. I mean, the long-term viability of the industry is going to be with us because of all of the incompetence and manipulation and bad decisions and bad mergers and high expenses. And I mean, the industry is known for not having been managed very well in the last 20 years. Okay. Well, that's actually sowing the seeds for some nice investment opportunities, frankly. And then when you add on top of that the fact that, we have batshit crazy financial markets, I mean, if anybody wanted to have a reasonable assessment of what's a nice value asset opportunity, it's pretty hard for me to imagine something more attractive than gold and silver opportunities.
Yeah, they haven't participated in the everything bubble. Everything else but gold and silver and precious metal mining shares has risen for the most part. But the beneficiaries of the manipulation and the capping gold and silver prices and all those bad deals for the gold and silver miners and their bad balance sheets for regular primary gold and silver miners has been the 5 largest precious metals royalty and streaming companies. So those guys have actually benefited a lot from the manipulation since 2011. Sandstorm Gold has been able to do an enormous amount of deals the last like 3 or 4 years, because we've still been in a bear market, and compared to a lot of the other mining companies, they've had easier access to capital. They have low cost cash flows and good margins. And obviously the other companies I like too, like Wheaton Precious Metals and Franco-Nevada, those companies are getting deals that they should not have gotten, so they're actually direct beneficiaries of the manipulation right now. I've actually bought more physical silver, Eric, a couple months ago when silver was starting to get below 16. I thought it was a buy. I actually was buying more Litecoin recently too on this correction. So have you been, switching gears here now before we wrap up the show, have you been taking advantage of this correction or large correction or crash in the cryptos? Have you started any positions in Bitcoin or Litecoin or anything?
I haven't done anything just yet because of the speed at which things started to unravel once they launched the futures exchange trading for Bitcoin. I was expecting the markets to race up and test 20,000, but I wanted to watch and then just kind of see where things are trading. And I do think that we're going to have another panic-based push in the crypto universe that could conceivably even get us as high as something like 50,000 with Bitcoin, as insane as that sounds. But you'll recall, and our listeners will recall, when we were talking about Bitcoin and on our last show and around that time when everything was starting to percolate up, it's the kind of asset that people really do need to expect as being able to have at any given point in time in terms of its downside volatility as well as its upside explosiveness. That it's It's just where it is. It's a very different kind of asset as a currency, and Bitcoin represents the largest of the, so-called capitalization of the entire crypto space. So when you have a world that trades 6 trillion some odd notional value worth of currency trading in any given trading day, it doesn't take much for a single currency asset that's attracting attention because of its momentum to just go batshit crazy, and that's what Bitcoin has been doing. And I think that it's going to continue to do that. When the equity markets roll over, there will be a period of time before governments corral Bitcoin and other cryptos. And in that window of time, we're going to see Bitcoin go insane. But then, after that, governments are going to attack it. I know the libertarian community hates this when I, make this argument, but I've been saying it for years now, and we're starting to see it. Governments are going to co-opt and attack Bitcoin and other cryptocurrencies and attempt to use them for their own purposes. Yeah. So, it's dangerous. This is a very if somebody knows what they're doing as a speculator, go for it.
And you're not a diversified investor if you've liquidated all your other investments, your stocks, your precious metals, your mining shares, your real estate, and now you're invested in 4 cryptos. You're not diversified.
Well, yeah, I mean, some people have gone all in and sold everything else, and mortgaged their house and sold the furniture to buy cryptos.
Or credit cards too. Yeah, man. I think 20% of all crypto purchases in the last 6 months have been with credit cards. I have some friends who. I have friends who use credit cards to do it, but I know they have, stable jobs and can easily pay back the money. But I think other people just have fear of missing out and trying to get rich quick, and they're hoping that the cryptos would go up enough so they could pay back their debt and pocket a profit in addition to that.
Having watched big bubbles unfold a couple of times in my life, there's usually been like pulses where you see waves of understanding amongst the public as they begin to come to recognize this opportunity, and then greed takes over. And, we're far away from a kind of mass cultural awareness of Bitcoin that equates to the same kind of crap that was going on with 1999 NASDAQ. I mean, you would go in any sports bar in the country, literally 1 out of 3 would have, CNBC on instead of the Dodgers. I'm not kidding. This is a very different kind of early stage where we're at with Bitcoin, as odd as that might sound, given how huge the kind of move we've already seen. But the amount of participation in the North American, investor and speculator is probably less than 2%. So when we see the economy and the stock market roll over, prior to governments fully being able to control Bitcoin entirely, I think we're going to see another boom. And that'll be the real blow-off.
Well, Eric, actually, there's a price floor that's going to go into Bitcoin because from what I've heard, the cost to mine a Bitcoin were $1,000 last year per coin. And talking with one of my hedge fund contacts, he said his research that he's hearing that Bitcoin costs are rising due to competition and other problems, that it's like almost $3,500 now to mine a Bitcoin. So it's kind of getting, difficult like mining gold. And that's how, the blockchain was designed by Satoshi, where the cost would rise. And then we're going to have a halving, I think, in 2 years, because the last halving was in August.
Yeah.
Yeah, the last halving was in August. So we're going to have a halving then in the not too distant future. And that's going to make it even more difficult for the miners to mine Bitcoin. And so that's going to force the price up too. So, maybe we have maybe the Bitcoin correction lasts a little bit longer. I've said maybe 6 to 12 months at most, and maybe it's a little bit more painful. But I do know a lot of people, especially listeners to this program now, who are buying the dips, especially Bitcoin and Litecoin, a lot of my listeners. The one thing I am worried about, like you said, is with something like Ripple, which is endorsed by Ben Bernanke, it's endorsed by Wall Street, it's a centralized blockchain token. And so, even CNBC and those guys are pumping and promoting Ripple. It's kind of ridiculous. Where it's not the intended purpose of Bitcoin and blockchain, which is to hurt the banks and decentralize things and stuff like that. So that's what worries me.
And in the long run, we know that governments are open with this. So you can read their white papers. You can look at what policymakers in various countries are talking about in the media. They are openly trying to co-opt the blockchain technology for the creation of digital currencies in the future, so as to be able to control the monetary system.
Yep.
That's our future. That's not a good thing.
Dystopian. It's cash. It's a Orwellian cashless society wet dream from the elites. So if people like you and me, we're rabble rousers, we say or do something they don't like, they could shut off our bank account. They could shut off our credit cards.
You and I have been talking for 4 years now about probably how, at least 4 years, how at some point it's like a race. This technology can be co-opted and used for social control, but it also faces the problem of the system being able to be flexible enough such that we have an economy that's running on a currency system that, frankly, cryptocurrencies couldn't. I mean, they're only used by like 4 or 5 merchants online right now, for example, Bitcoin and Substance, Overstock, etc. Large companies. It's early days, and the government hasn't been able to get their hands around the crypto universe to the point of being able to use it as a tool for social control. And we might actually see a market crash before the government is able to get their hands on cryptocurrencies to the point of being able to use it as a tool of social control. And I'm kind of hoping that that's where we're going to be. It looks like that's where we're going to be. That we're going to see a financial crash before they have their tool set ready. But they're using cryptos as a way of expanding their tool set to deal with financial market crashes. That's the whole point of bail-ins. That's the whole point of locking down the financial system with bank holidays. This is the kind of, frame of reference where these policymakers are looking at cryptos as a way of being able to have a cashless society and have negative interest rates, for example. If people can't access cash and everything's digital, they'll be able to charge people money for having the privilege of holding money.
Immediately. And you can't protest it. It automatically happens. There's nothing you can do about it really then. Especially if they ban cash in coordination with it. You put a money in a bank, it's all digital in a cryptocurrency. Cash is banned. It's automatically taken out. They can add a VAT tax to it and automatically take that out of your paycheck. They can add, carbon cap and trade tax, automatically take it out. They can just do that, and there's not much people are going to do about it. Welcome to dystopia. This is the crazy future. I don't think the technology is bad. I don't think technology is good or bad. I just think, it depends what the people are going to use it for. And the people who are in power, they don't care about freedom. They don't care about limited government. And ultimately, Eric, they
do care about freedom. They want to kill it. That's their goal.
Yes. Well, yes.
We're livestock.
But ultimately, though, one of the number one things, and this is why I don't think the central banks will allow an asset price crash for a prolonged period of time. Maybe we'll have another one like 2008 that's as bad or worse for 6 to 12 months before they come back in, is this about tax revenues. And so one of the main reasons why they didn't allow the, say, stock market to go more than 80% down, 90% down, and they came in and they changed the accounting laws for the banks, was because U.S. capital gains taxes dropped like a rock. I think they were down more than 20% in a short amount of time.
Yeah, so, that's a great point.
And so, tax revenues, this is something that governments care about. And so they're looking for new ways to raise taxes on you. So, like you said, with the cryptos, actually temporarily for governments, this is a tax boom. If they can bring in, tens of billions of dollars in crypto profits that were not there before, this is good for them. This is good for them.
I don't think it's going to make that much of a movement of the needle, frankly. I think they're more worried about crypto.
For the U.S., no, but for another government, maybe. But yeah, the U.S. a couple of billion is not going to matter. But
I heard Bulgaria found like 3 or 4 billion extra on their foreign account because some Bitcoin hiding.
But if real estate prices, bond prices, and stock prices all fall simultaneously, like basically what we had in 2008, that's hundreds of billions or more in tax revenue loss. And so that really over a prolonged period of time is not going to be allowed.
Yeah, and that was also 2009-10 were the first years that the Americans actually withdrew a lot of their credit and they built up their savings, and there was a good deal of sobriety in the country. That's the kind of reaction that you normally get in a business cycle, and policymakers hate that. They fight that kind of thing. They hate the business cycle and its curative impact to real economics.
Well, unfortunately, Eric, I think things are just going to get weirder before things get better. When the Swiss National Bank is making $55 billion a year in trading profits, more than Apple, more than JP Morgan, and more than Berkshire Hathaway, something is wrong. And, most of the financial professionals I talk to, especially the regular ones, Eric, they don't even know about this, and they don't even care.
The punch bowl is full. The music's still playing.
And they have mutual funds for stocks and bond funds to sell. They can sell you, these new ETFs that are all the craze. And so you could just buy, a new FANGs ETF, and you can get rich quick.
And that's also pretty telling, too, because in the last 2 years we have seen the U.S. retailer segment of the investment community come back into the markets. They always buy at the top.
Business is booming. Business is booming. They actually hired in the last 3 years, I think, a record number of new stockbrokers to sell these ETFs and stock mutual funds and FANG funds and things. That's how well things have been going.
Yeah.
Well, we'll see how things play out. Ultimately, Eric, I think 2018. I don't want to make any predictions on the show because we're wrapping up. I don't want to take the time to do that. Maybe we'll do that on a next show. But, ultimately, I think 2018 will be defined by if the Federal Reserve, ECB, and Bank of Japan really reduce the liquidity injections and temporarily take away the punch bowl, or if that's all talk. So we'll find out in 2018. But I think, we've had record amounts of no asset price volatility. And with the manipulation of the VIX, we found that out in the Fed minutes from Jerome Powell. And that's a trade that the private sector traders and investment banks and hedge funds have all piggybacked. I don't think that's sustainable either, where there can be no asset price volatility.
That's one of the black swans to be, frankly. I think that's, and the bond market going up is going to be one of the proximate triggers for it. And just one final note, because you just brought it up. I mean, we've talked a lot about how that volatility bomb is sitting there, how this unnatural quiescence that has been engendered in the market by the Federal Reserve is now actually something that's documented. Back in 2012, the soon-to-be Fed chair, Powell, actually said in one of the FOMC meetings that the Federal Reserve that he was concerned about the Federal Reserve's policy about, their volatility short trade. They actually are on record now admitting that they've been shorting volatility in the market. That was in 2012.
I obviously didn't have that information, but you could kind of tell with the price action that, Eric, someone was coming in when it looked like the VIX was going to start moving higher. Someone comes in and just hammers it back. Similar price action.
These jackasses have denied this in public. I don't remember who it was. I think it was Bullard. New York Fed Governor Bullard. Who was asked on CNBC, memory doesn't serve right, but one of these creatures were asked about the unnatural nature of volatility in the marketplaces and how it's been just a freak of nature that we've seen no volatility in the stock market. We haven't seen a period like this ever in the S&P 500. Ever. And it's now a documented fact. It's in damn minutes. 2012, our soon-to-be Fed chair was talking about how he's a little scared to death about how the Federal Reserve has created this artificial reality with, markets that have a lack of volatility because they're suppressing it.
Yeah, and
and that was 2012.
Well, it's like what Chris Powell of GATA says. We don't have markets anymore. We only have manipulations.
Yeah.
But that doesn't mean that they can move the price, every single price up or down to whichever levels they want. There's limits to this. So people out there who have given up on gold and silver, there are limits to how much they can manipulate something up or down. They can't move the oil price with manipulation up to $100 a barrel because the global economy and a lot of Americans can't afford $100 barrel oil, just like they can't move the oil price. If someone wanted to manipulate it down, to below $40, down to $35, $30, $25 a barrel, then the oil producers, a lot of them would go bankrupt. So there are limits to this.
Yeah, there's $5 downside in silver, realistically. Worst case scenario, and $100 upside. I mean, geez, that's really what we're looking at here. It's very unlikely that even with massive cartel manipulation and a deflationary massive crash, a la 2008, that brought silver down to 8 and change for a very short period of time, like about a month and a half, we're not going to see some major damage in precious metals precisely because of the kind of thesis that Jason and I have outlined here. The physical market will stop manipulation. It curtails it. That's exactly what Murphy at GATA, Bill Murphy, refers to when he coined the term managed retreat. The cartel is going to have to retreat in a managed fashion lest they explode the very tools that they use to keep prices maintained lower in the first place. It's a catch-22 for them.
Either that or they convince a bunch of, industrial end users to stop using silver immediately, which would be, very difficult for them because
That's
graphene...
Impossible.
Yeah,
you don't invent a new industrial economy in 24 hours. It just doesn't happen. Half of the silver roughly in the world that's mined every year is used in industrial applications.
Exactly, and copper is inferior to silver for many different things, and also graphene, which I'm bullish on in the long term. Graphene is not ready to go at a commercial scale. There's a lot of problems still with manufacturing graphene. It's not really, I think it's in only one commercial product so far, although more are planned. So graphene really is 10, 15, 20 years away from it being a part of everyone's everyday life. It's just not there. It's not ready to go yet.
Yeah, 12 years ago, 13, 14 years ago, people were freaking out about how digital photography was going to completely change the supply-demand metrics for the silver marketplace, and that there would be no, recycling market with hundreds of millions of ounces flowing into the annual supply for silver, and all of that just, became a non-issue when you have a technology shift like solar panels coming in and silver being used extensively across industry all over the place. More patents for silver come than any other metal in any given year. It's used all over the place. And we have a scarcity issue. We have mines that are not being able to pull it out of the ground at a profitable rate for a long, duration cycle. So the metal has to go up in price.
I agree. I think we're going to have a big move in gold and silver in probably less than 3 years, might even be less than 2. So, maybe we go sideways for a little longer, maybe we dip a little bit, but those dips probably should be bought. Now, I know sentiment-wise, a lot of people have already given up, thrown in the towel, but, I think things have turned. I think things have turned. So I'm not predicting a huge price movement. I'm not King World News. So I'm not saying, silver's going to $80 or $100 in 12 months or anything. Yeah. But I think, we finally have, basically bottomed. And I think, the bull market has basically restarted. But just because the bull market has restarted, Eric, doesn't mean, we're going to see really, really big moves in a short amount of time, like cryptocurrencies.
I mean, we should be in silvers in the 20s and gold 1,500 plus pretty easily this year. And that's just a base scenario. I mean, we probably will go a lot higher because of the problems that we have in our financial markets that are not related to gold and silver.
Exactly, and if you're in the right mining shares or royalty and streaming companies, that's potentially 50% or more a profit on your investment. So
that's right.
Just because if the metal price goes 20% higher, the margins on some of these companies, they get leverage. The operational margins would improve, and if they maintain their costs don't rise like crazy. That's a big margin increase.
And what I'd say to our listeners too is, don't be like the average jackrabbit that comes into the precious metal space thinking, I'm going to make a ton of money, and just buy what is sober insurance exposure that also, if you're interested in speculating, also gives an upside speculation too, if that's what you're after, and hold it. Buy what you can hold, because at some point it's going to pay off. That's just a value investing thesis combined with an insurance perspective on an alternative asset that can save your butt. And we're living in a time where something's going to happen pretty ugly when it comes to our financial markets, and it's just a question of what and when.
Exactly, Eric. And the last point I want to make before we end the show is, what is cheap? So if you're a value investor and you're looking around for what's cheap, I mean, you're paying ridiculously high valuations for large cap dividend stocks. So those prices are high. I don't want to buy that. If you're a hedge fund manager, maybe you buy a call option or an out of the money leap or something on like the Dow going higher, the S&P going higher or something for a trade, but not an investment. That's like a gamble that you're making that the central banks will goose the markets higher in a crack-a-boom or something. If you're buying value, I mean, there's very little things in this everything bubble that have any value that are value investments.
You can even buy large cap gold companies that have small dividends. I mean, they don't pay much, but, a diversified portfolio with a little bit of mix of large cap, mid cap, exploration companies, some bullion. You can put together a really nice portfolio that has nice exposure to precious metals, and then just sit on it.
Yeah, I think that's pretty prudent investment into precious metals. The other thing is, having a little bit of cryptocurrency just in case the precious metals manipulation lasts, another year or two. Then your crypto temporarily is going to hedge your bullion, your gold and silver investments, and the crypto may go up. So we may have a scenario where both of them go up, crypto and precious metals, both of them go up in different percentage terms, or one goes up and one goes down, or one stays flat. So I think the mistake a lot of people are making from seeing a lot of posts is that a lot of people have liquidated their gold, silver, and precious metals, and they're trying to get rich quick in crypto. And, maybe in the short term it could pay off, but a lot of people, Eric, unfortunately, are not taking profits in their crypto. Like, I have friends who, I won't name their names, but I have friends who have over $500,000 in crypto profits, and they have not sold anything. Mm-hmm. So I think, and now it's initially it was not a large chunk of their total investment portfolio and their net worth. If I was them, I would have taken, 10% of the profits at the top a month or two ago, and I would have been buying, rental properties. I would have been buying.
Some of those people might even have more than a double. There's an old axiom when it comes to junior mining investors, and that's you sell what you put in for your initial stake, and then ride with house money. And
I have friends who have way more than a double. I have friends who are up like thousands of percent returns. Yeah. And so they haven't sold anything. And so I'm telling them, the government could change the rules on you, and next year, the year after, put in a windfall profits tax on you.
Yeah, or look at some unfortunate souls who are in Montauk's, or other things that just go poof,
There was a new Ponzi scheme, BitConnect or something. Like a lot of people were warned not to go in there, and they promised like some type of interest payments on your crypto, and people went in there and got screwed anyway.
I mean, a lot of people who are getting into the market are not sophisticated tech types. There's new money flying in. They don't know what they're doing. They're not savvy libertarian technologists.
But my point is that, or just regular people who bought some Bitcoin like years ago and held it. Regular libertarian people. There was a lot of libertarians who were early in Bitcoin, but a lot of them sold out of Bitcoin when it hit a couple $1,000s. Mm-hmm. And so they were in early in Bitcoin, but they got out at $5,000 a coin or less because they didn't believe it would go much higher. But, the point is that if you have too much of your investment portfolio that's up a lot, it's probably prudent to do some research and maybe rebalance your portfolio. And especially if you're working a job you hate, and a lot of people always want more income, that rebalancing your portfolio, especially if you can find new like income producing investments like rental properties and stuff. Like if I had over $500,000 in crypto profits, like I said, a month or two ago when Bitcoin was around 20,000, I would have sold maybe 10% of my crypto, and I would have went out and bought a couple rental properties. That would have given me a couple $1,000s per month in rental property income. Just to, rebalance my portfolio, be diversified, be more prudent, maybe go out and buy some uranium stocks or some of these nice marijuana stocks. Try to go find some. So
light a joint, really light a joint, chill out.
Well, Eric, if you want to come, so I'll call you out in public. So if you want to come in March to the Liberty Con here in DC, if you want to come to that, where Peter Schiff, John McAfee, John Mackey, CEO of Whole Foods, and Steve Forbes and other guests are speaking. If you want to come out here and hang out with me, you can actually, if you get a hotel room in DC, you can actually order marijuana like a pizza.
That's pretty cool. Well, I should further out myself. I actually grew medical marijuana on my property last year. So, maybe I'll bring you a present.
I'm in Virginia. We didn't have this conversation, okay? So I'm in Virginia, but if I come meet you in DC, we can have a party with some of our listeners there, and it would be fully legal, okay?
Or come out. We should have a welcome to Dystopia party in Oregon.
We can maybe talk about that in the future. I don't get out to Oregon very much though. I may go back to California in the near future, Arizona, but I haven't made any plans for Oregon. But it sounds pretty nice in the summer. But you've been listening to Welcome to Dystopia episode 39. Thanks for listening, and comment, like, and share this episode if you like it.